Hello guys. All right. Hello guys. Welcome back. All right. This is Sesky Trades. Let's get on with it. So if you were here last week, you already know what futures trading is, right? You already know what futures trading is. Today is about definitions. We're going to talk about why people still lose money, why people still fail, even though they understand futures trading in general. So that's what we're going to be talking about today. Today's going to be fun. I'm sure you guys are going to enjoy today. Let's get to it. Welcome, guys. All right, guys. Before we go on, basically, yeah. So, um, I know you guys know that my platform of choice for trading futures, sports, and anything that has to do with trading is LBank. So, if you want to join LBank, I advise you to click on the link in the description and use that to join LBank, the LBank platform. LBank gives amazing rewards for people that use that link. You get special rewards basically if you use that link to join LBank. So you get yourself in, and if you have any questions or any issues about futures trading, even after the classes, you can always go watch the videos. And if you still have more issues, you can always send me an email. Or you can follow my Twitter and you can send me a DM on Twitter. All right, so they call it the X platform these days. Okay, today, like I said, we're going to be talking about definitions, reason why people still fail in futures trading, even after they understand what futures trading is all about. Okay, yeah, we'll get to it shortly. Okay, welcome to Sesky Trades. All right, let's get to it. Okay. All right, but I'll say something quickly. All right. So most futures trades mistakes or most futures losses are not technical. They are behavioral. All right. I'll repeat that again. Most futures losses are not technical, but behavioral. All right. So basically same setup, same analysis, everything same, but you still make losses. It's basically behavioral. All right. So you can see what we have here, the behavior magnifier. Why traders fail with futures even when they understand the mechanics. All right. The behavior magnifier. Why traders fail with futures even when they understand the mechanics. All right. So this is what we are going to be, talking about today. All right. So yeah, let's get to it. All right. So basically, you should know that futures don't magnify skill. All right. Futures trading doesn't magnify your skill. They magnify your behavior. All right. So futures trading don't magnify skill. They magnify your behavior. I repeat again. Futures doesn't magnify skill. They magnify your behavior. All right. If your behaviors are reckless, basically losses accelerate. If your behaviors are reckless, losses accelerate. But if they are disciplined, then everything can become stabilized. Your results stabilize. You start getting good profits and you start making profits from the market. All right. So you can see from our slider here, this is not futures explained again. If you are here and you are already understand what futures are, today is not about definitions. I already said that. So today is about why people still lose with futures even after they understand them. All right. Today is about why people still lose with futures even after they understand them. All right. All right, so you can see features don't magnify behavior, they magnify skill. All right, sorry. Yeah, features don't magnify skill, I mean, they magnify behavior. Okay, so if features don't magnify skill, they magnify behavior. If your behavior is reckless, losses accelerate. But if your behavior is disciplined, results stabilize. All right, if your behavior is reckless, losses accelerate. But if your behavior is disciplined, losses stabilize. Okay. All right, let's start with the biggest misuse. Okay, let's start with the biggest misuse. You can see diagnosis one: treating leverage like an achievement. Okay, treating leverage like an achievement. Uh, 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 uh. You can see diagnosis one: the leverage fantasy, treating leverage as a goal. The most common misuse of futures is treating leverage like an achievement. Higher leverage is not a sign of progress. 10x, 25x, 50x. Leverage is not a badge, it's responsibility. Most people feel that, okay, there's high leverage, the sign of achievement. If I make profit, they just get greedy. They get greedy. If I use 10x leverage, I'll just get 10 times the profit. But if I use 25x, if I use 50x, if I use 100x, I'll get 100 times the profit, and boom, they get in without checking and managing their risk properly. And the higher the risk, the higher the reward, of course. And also, the higher the losses. It's easy you get liquidated. Once one wrong move and you're off the market. That is why you need to learn how to manage your risk properly. Risk management is very, very important. The leverage fantasy, like I said, treating leverage as a goal. The most common misuse of futures is treating leverage like an achievement. Higher leverage is not a sign of progress. Okay, higher leverage is not a sign of progress. Leverage is not a badge; it's a responsibility. All right, let that sink in, guys. Let that sink in. Put this in your head. Leverage is not a badge; it's a responsibility. Let me even give you an example. All right, so let's go to our LBank platform and see the leverage thing we're talking about. Okay. All right, so this is our LBank interface. All right, futures trading. Now, this is what we're talking about here. For those of you that still don't understand. All right, so we're on a limit order here. So what we're concerned with is leverage. You can see here I have 200x leverage. Let me open it. Let me click it so that you guys see. See, 200x leverage is the highest. This is the BTC USD PEP. When you see PEP on the platform, on the LBank platform, it means perpetual. It's just basically futures trading. That's what we use to differentiate between futures and sports. It's a perpetual contract. All right. So yeah, you can see we have 200x leverage here. Now, why do you see this here for me? Because I know I said leverage is something that you shouldn't joke with, especially as a beginner. But if you do your risk management calculations properly, like I use the position sizing method. All right, I use the position sizing method to calculate my risk in futures trading. Now, once I use position sizing, now the leverage doesn't matter for me. It doesn't matter for me. All right. So I use position sizing, the leverage doesn't matter for me. But since you and I think I spoke about position sizing in some of our previous live streams. All right, I spoke about that in detail, and I taught you how to do that. Go check the other live stream videos about position sizing on the platform. All right, so but for a beginner, if you don't know how to do position sizing, Basically, you just know how to do the basic futures trading, the basic trading style, and basic risk management style, where you just multiply your leverage by your position. Then you just stick to 10x to 20x at most. 20x is even too much. 10x, 15x, you are good to go, so that you wouldn't liquidate your account. And now this is how we do it. You can either use the slider, like you can see I'm doing it here, to reduce on the LBank platform. See, I've reduced it to 1x, 2x, 3x, 20x, 30x. You can see that. You can see that. You just come in here and type in the amount of leverage you want to use. Is it 10x? Is it 20x? Is it 30x? Whatever it is you want to do. Okay, whatever it is you want to do. So you do that, and you don't go more than, like I said, don't go more than 20x. Don't go more than 20x. So let me confirm this. So I'll wait for that to load. Aha. All right, you can see it has changed to 20x here. So this is the maximum advice for newbies, except you know how to do position sizing where leverage doesn't matter anymore. Okay, so please take note of that, guys. Take note. You don't go more than 20x. All right, so let's get back to our topic. Let's get back to our slide. All right, so I'll repeat the diagnosis one again. The leverage fantasy, treating leverage as a goal. The most common misuse of futures is treating leverage like an achievement. Higher leverage is not a sign of progress. Do you understand? Higher leverage is not a sign of progress. Please understand this. Alright, understand this. Higher leverage is not a sign of progress. Leverage is not a badge, it is a responsibility. Alright, so let's get that in. Now, so here's why leverage is dangerous. Alright, leverage reduces the margin for error, basically. Leverage reduces the margin for error. With a lower leverage, you have a higher margin for error. You understand? With a lower leverage, you have a higher margin for error. But with a higher leverage, your margin for error is very low. Any small move, and you're liquidated, you're taken off the market. Alright. So leverage reduces the margin for error. Alright. Leverage reduces the margin for error. Same stop, same move, bigger consequences. That's just it basically. Same stop, same move, bigger consequences. Okay. Basically, the market does not adjust because you use more leverage. The market doesn't adjust because you use more leverage. All right, so let's go on. Then the analysis. High leverage, like I just said, high leverage analyzes your margin for error. The market does not adjust adjust its volatility because you use more leverage. The same price move has a dramatically larger consequence. Can you see this? The same price move has a dramatically larger consequence. The same price move has a dramatically larger consequence. Low leverage, wide margin for error. High leverage, narrow margin for error. Same stop, same move, bigger consequences. I just said all this, all right? Same stop, same move, bigger consequences. Okay, so let's assimilate that. Okay. All right, so moving on. Now the correction is very very boring, but it's quite powerful. Okay, for sorting out this leverage thing. So use the lowest leverage possible, basically. Use the lowest leverage possible. Use the lowest leverage possible to express your idea. That's just it. Use the lowest leverage possible to express your idea. All right. So if you begin to feel something because you want you if you need to increase your leverage because you want to feel something, then you are wrong, man. You are wrong. That's not trading. That's your ego. That's your pride. That's your greed playing out. Okay. So use the lowest leverage possible to express your idea. That's what's written here. See, you can see prescription on our slide. Use the lowest leverage possible to express your Production is boring but powerful. Your goal is not to maximize leverage, but to use the minimum effective dose required for your trade thesis. All right. I'm having some technical light power issues. Let me just quickly sort that out. I'll be back shortly. Hello guys, sorry about that. I just had to quickly sort out some technical. So I'm back now, and let's go on with the stream. Okay. All right. So like I was saying before the break-in transmission, so use the lowest leverage possible to express your idea. The correction is boring but powerful. Your goal is not to maximize leverage. All right. Your goal is not to maximize leverage, but is to use the minimum effective dose required for your trade thesis. All right. Use the lowest leverage possible to express your idea. All right. To express your idea. The correction is boring but powerful. Your goal is not to maximize leverage, but to use the minimum effective dose required for your trade thesis. All right. Your goal is not to maximize leverage, but to use the minimum effective dose required for your trade thesis. If you need high leverage to feel something, that is not trading. This is basically what I spoke about. All right. If you need high leverage to feel something, that is not trading. That is not trading.
Almost magic.
All right. So let's move on to the next thing. Diagnosis two. Oh, all right. Confusing confidence for certainty. Basically, this one you're confusing confidence for certainty. This one is very, very subtle. People people feel too confident when they trade. They believe that analysis are the best. That the analysis is the is so right. They are so confident when they do a particular analysis, and they start to size up basically. All right. So confidence is emotional. All right. Confidence is emotional. Certainty is imaginary. Okay. So you just if the market doesn't care about your feelings, man. The market doesn't care how sure you feel. It doesn't. All right. So you need to be humble. All right. The market, like we say, maybe your papa game markets. You understand? Maybe your papa game markets. The market doesn't care how confident you feel. If the market wants to go against you, to go against you, and it will mess you up. It will liquidate you. So don't fall for that confidence trap. Okay. Do not fall for the confidence trap. Do not fall for the confidence trap. Diagnosis two, the confidence trap, mistaking feelings for certainty. A winning streak builds confidence, which traders misinterpret as a signal to increase risk. A winning streak, do you get a winning streak? Most people, when they start getting a winning streak, or more, I'm the baddest guy in town. I'm the most, I'm the best trader in town, the best technical analyst in town. All right, they start building confidence. The market is the perfect humbler to level you. All right, a winning streak builds confidence, which traders misinterpret as a signal to increase risk. But confidence is an internal emotional state. It has no predictive power. Alright, that's just it. Confidence is emotional, certainty is imaginary. Alright, the market does not care how sure you feel. The market literally doesn't care how sure you feel. Okay? Get this into your thick score. Don't go mumu yourself. You understand? Reduce that confidence. No matter how good your analysis and setup is, don't be too confident, or else don't be too confident. All right. Wait for the market to show you signs. Like I said in one of my previous live stream, patience is key. Patience is very, very key. Wait for the market to show you signs. Wait for those signs. Wait for those signs. All right. Wait. Wait for those signs. So basically, what's the fix? What's the fix? Risk basically stays. Okay, let me change this. All right. So the prescription: anchor risk to your system, not your feelings. Your risk per trade must remain constant, regardless of your confidence level or outcome of the previous trade. Your risk should remain constant. All right, your risk should remain constant, regardless of your confidence. Once you've made that rule that okay, this is what you're going to be risking per trade, let it be constant, regardless of your previous winning trades or losing trades. Okay, regardless. All right, just a minute. Hold on.